Good morning, good afternoon, and good evening, folks, and welcome to our master series. In today's particular segment, I'll be covering how to trade stocks and the most frequently traded stocks that everyone is really looking at. Before we begin, please do give me a thumbs up by saying yes or no if you can see my screen, and also if you can hear me loud and clear. Great, thank you, Philip, and thank you everyone for responding to that. My name is Naeem Aslam. I come with a wealth of over 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon, as an equity trader with Bank of America, and currently covering as a chief market analyst for AvaTrade, covering all markets, including stocks, Forex, commodities, and cryptos. Our masterclass is very much focused on the stocks. We'll be covering some of the Chinese stocks which have been moving higher in the last month or so. In addition to that, I'll be also focusing on some new tech stocks that are gaining quite a lot of momentum, not to mention the earnings season and where are the opportunities within that. For instance, in this particular earnings season, we have heard quite a lot from tech companies, their issues with the supply chain. We had companies like Peloton where the shares plummeted. The same happened with Netflix as well. Nonetheless, some of these companies or corporates have clawed back some of those losses. Now, the big question really is, where are these stocks heading from here onwards? Are we going to see higher highs, or will the downward trend continue? And more importantly, where are the opportunities within these sectors? So I'll be analyzing the full stock indices, the major stock indices over in the United States. And by that, I mean S&P 500, which also goes by the name of US 500. We'll be looking at the tech index, the NASDAQ 100, also known as US Tech 100. And finally, the Dow Jones Industrial Average, or shall we say US 30 stock index. Now, I know some of you may have attended this particular webinar previously, but the beauty of this one is that markets change on a daily basis. Forget about like talking about a week or a 2 weeks basis. So that presents new opportunities. And as an investor and trader, you should be really banking on these particular opportunities, because obviously volatility is a bread and butter for any day trader. And that is the opportunity that you will have, and then I'll be highlighting a large number of them. Now, before we continue, it is important for me to do some risk warnings and some disclaimers which are right in front of you. Please feel free to get in touch with your own account managers if you have any questions. Twitter, the contact details are in front of you. If you have any questions, feel free to get in touch with your own account managers. Now, the agenda today for the masterclass for stock trading for the next 20 minutes or so is going to be measuring indices. What do we mean by that? How do you classify measuring indices? Basically, we'll be looking at where are the overall general markets. Are we in an upward trend? Are we in a downward trend? Or the markets are doing nothing and just moving in a sideways direction? That is what we mean by measuring indices. Now, once we have our general understanding of the overall trend in the market, then it'd be easy for us to drill further into the sectors. Now, from the sectors, what we wanted to see is the overall landscape that we are really looking at. And in today's particular segment, I wanted to focus a little bit more on the fundamental side rather than on the technical side. On the fundamental side, we'll be looking at what is the geopolitical situation right now, why the market tanked in January, what was the reason, are those factors still sticking out in terms of creating the sell-off that we are seeing, or are we going to see like bargain hunters coming back into the market and pushing those markets higher? And what did we learn from the from your earnings season? Because earnings season was one of the major driver. And finally, of course, COVID-19, the variant of COVID-19, how they have influenced what we have learned from these companies, and where do we go really from there? Now, special stocks, which we will also be covering among other stocks, would be, of course, in streaming, we'll be focusing on Netflix and Disney Plus. In airlines, I'll be focusing on Boeing. In the pharmaceutical sector, I'll be looking at Johnson & Johnson and Pfizer. When it comes to online retailer, we have Amazon, eBay, and of course, Alibaba. For energy sector, I wanted to focus on Chevron, ExxonMobil, Shell, and Total. As for the banking sector, we wanted to focus on Bank of America, Citibank, Barclays, and Goldman Sachs. Now, considering what I wanted to ask you guys, and I wanted to welcome the opportunity. I wanted to bring everyone with me in this particular webinar. I wanted to ask you guys one simple question. Do you think that we had so far, the month of January was a positive month for the stock market, for the overall stock market, or was it a negative month? So start typing your answers in the chat field and tell me, what do you think? Negative month? Absolutely, Amutha, right on the spot as always. And Amutha is telling us that during the month of January, or during January, we did see a major retracement, a major sell-off in the stock market. How intensive the sell-off was, how it was, we will of course be discussing that, but I kind of wanted to gauge how many users, and Philip is also commenting here as well, and then saying that yes, it was a negative month, and so many other people at the same time are saying yes, it was a negative month. I wanted to see that if someone is going to say, you know, actually January was a positive month, because that would have given me some indication that what's the caliber, how people are in our webinar, because we got, you know, nearly about 100 people right now in our room. So everyone believes that yes, the market was negative. It was a rotten month for the equities, which was absolutely true. And that presented many different opportunities in the market. In our weekly webinar series, we did cover that. And of course, we also cover on our YouTube channel on a daily basis various different opportunities. For instance, today we talked about oil prices, because oil prices are retracing for the last 3 days. We all know that we have seen a stellar rally for oil prices, right? Because oil prices have been shooting to the upside, and banks like Goldman Sachs, JP Morgan, the big dogs of Wall Street, they've been saying that these oil prices are likely to touch $100 a barrel. Now, of course, as the oil prices were increasing, we did see energy stocks coming up with their earnings, and in the quarterly earnings, what we did see for these energy stocks was massive quarterly gains, and that was all certainly very, very positive when it came to these particular companies. But of course, for investors who are in this game for a long-term, from a long-term perspective, they know that this is the short-term gain, nothing more. And because oil prices are not going to stay where they are, they will go down, and because renewable energy is the area. So the most important thing in those earnings were what these companies were actually diversifying their hedge. Were they actually doing something important or not? I got some really interesting comments coming. I wanted to go through some of them. I had a good month on South African companies. Okay, Philip, that's wonderful to know that. Ali is saying positive, just the Russia-Ukraine situation is annoying the market. I am coming to that, Ali. And Joy is saying the crazy sell-off contributed to the blow up of my account, as I was long on many positions, especially US Tech 100. Nikkei 225, and Tesla. Joy, I am sorry for your situation, and what I can also say is that I wish that you would have attended any of our webinars, and more importantly, um, I wish that you would you would have involved yourself on Twitter with me in relation to understand and clear the noise, because that is what we do. You know, you have my Twitter account. You can ask me a question. I can answer those questions. Yes, the month of January was incredibly tough for Nasdaq, because Nasdaq was one of the toughest index. To trade, especially if you were long, because the sell-off was very intense, and it was nowhere close enough for the Dow Jones Industrial Average or the S&P 500 index. And most of the sell-off came on the back of the big tech giants losing that one. I mean, right now, if you look at Netflix, their market cap is under 300 billion US dollars now. I mean, that's huge. That their market cap has dropped about over 250 billion. It used to be $500 billion company, and of course that's going to have an influence on Nasdaq because it's part of that. So yeah, the overall, but going forward, the important thing is that you learn from your mistakes and you never repeat them. And you have a diary of having your mistakes, and then you put those mistakes on your diary. Whenever you take your trade, you check them against your diary, what mistakes you have done previously under the similar situation, or let's just say even the same situation, and making sure that you are not repeating those mistakes. I can assure you, everyone loses money in this market, but the people who come to the top are the ones who do not repeat mistakes, because making a mistake is not a sin, but repeating a mistake is certainly a sin, which is very expensive for the market players. Now let's get back to the actual markets and see what we were really talking about over here. So what I'm going to do is I'm going to bring out the MT4 platform, and quickly when I'm going to go through the major index, the Dow Jones Industrial Average, which we did, I believe, last week in terms of the market potential. Now, the massive sell-off that happened more recently was this particular one, when the market made its all-time high right around over here. After that, what we did see was a massive sell-off coming right over here, pushing the market, pushing the Dow Jones Industrial Average well below its 200-day simple moving average. And at the same time, the RSI, the relative strength index, which is an indicator which tells us whether the markets are overbought or oversold. Anything which is near 30 represents oversold. Anything which is near 70 represents overbought. Told us at the time that the markets are oversold, time to buy. And we did mention that this is a good opportunity at the time in our technical analysis on our YouTube and in various different videos as well. Now, if we look at the weekly time frame at the same time, because this is your 50-week moving average, this is your 100, and this is your 200, the price did come into this area. It was this particular area which was quite interesting for us at the time, and we were looking at it. It was this area that we were saying that, okay, market is going to come into this area of support and more likely to bounce. And if it wasn't this area, then the next area would have been near its 100-week moving simple moving average. But now market is ready to go into next rock and roll situation. So as of today, if you are a day trader and if you are looking at the Dow Jones Industrial Average, you can put your stop loss on the lows of today and then let this particular trade continue from here onwards, because now it seems very clear that this particular bull rally, which started from here, and we had the first confirmation when the price passed above that 200-day simple moving average, is likely to roll to the upside, is more likely to go up and up and up from here onwards. Now, so the overall, what we can say is, by looking at the Dow Jones Industrial Average, that the overall strength in the market seems to be pretty decent. The overall strength in the market seems to be very good. Now, what about the Nasdaq? This is something what Joey was really talking about. Joey, it's Naeem Aslam 23. I'm the chief market analyst. That's my Twitter account. It was also at the beginning of this particular one as well. and I can possibly write it over here as well. Send to all. So that's the Twitter account, so you can see that. So okay, so ask me any questions. I'm very active on that, and then I can help you guys with that. Now, when we're talking about the Nasdaq, now remember the Dow Jones Industrial Average is above its 50, 100, and 200-day simple moving average. But when it comes to the US Tech 100, we are still below these important moving averages. And that is telling us one thing and one thing only, that the Nasdaq is still feeling quite a lot of pain. It is still under intense pressure, and the bulls are still finding it difficult to push their prices higher, because we should have seen by now the Nasdaq breaking above the 250 or at least the 100-day simple moving average, but we haven't seen that. At the same time, the positive element is that the 50-day simple moving average is kind of moving sharply. This is the 50-day moving sharply towards the price, and the moment the price crosses above the 50-day simple moving average, just like how it is doing it with the Dow Jones Industrial Average, you put your stop loss on the lows of that particular day and then let the trade continue from there onwards. But for this one, we don't have that, and the problem with it here is that we have companies like Netflix, which are still under immense and intense selling pressure and likely to continue that way. A lot of tech companies are still feeling quite a lot of pressure. Now, when we look at how do we measure the overall sentiment in the market, how do we know that the overall stock market is going great? Because the Dow Jones Industrial Average tells us about the industrial stock. The Nasdaq, on the other hand, is telling us about the majority of the tech sectors, what is happening in the tech stock. How do we know? How will we find out the overall market? What is the situation in the overall market? The overall market situation can be monitored by looking at the S&P 500 index. And what the S&P 500 index is really telling us, that the market has improved. The sell-off, the big sell-off that happened right from here and then brought the prices all the way to its knees right over here into this area, is quite, now the price has moved quite away from that particular level. In addition to that, it has also broken above the 200-day simple moving average. So the prices are moving in the right direction. The overall market is finding strength, but it is obviously not as strong as the Dow Jones Industrial Average. Now remember, last year the Dow Jones Industrial Average was very much struggling. The industrial stocks were very much struggling, but now this year, this particular year, it seems like that it's the tech stock which are really struggling, and your industrial stocks are very much in the lead. They are finding momentum, they are moving higher, and then we are likely to see that momentum continue from there onwards, which is very positive in terms of the stock market. So overall, as long as the price continues to stay above this particular 200-day simple moving average, we can say that the markets are moving higher. So to summarize, what we have learned from so far by looking at the markets is that the tech sector is still struggling, industrial sector is thriving, overall stock market is improving, or it is no longer under bear influence. Does that make sense before we jump onto our stocks? If you have any questions in relation to them, now is your opportunity to really ask me those questions, because I can help you if you don't understand that. Okay, great. Everyone is saying that they have learned. Okay, so one important thing about the markets really is why the markets have seen such an intense sell-off. The market has seen such an intense sell-off because of the supply chain issues, number one, because of COVID and Omicron and whatever that comes in. Number two, the markets have seen sell-off because of the central bank's policies, the hawkish monetary policy, because now they are taking money out of the market. They are not providing the support as they were before. Number three, geopolitical tensions, just like how someone mentioned earlier about Russia and Ukraine. That is also keeping the markets on its toes. Number four is, of course, higher oil prices, which are feeding into inflation, and higher inflation is making central banks to take more aggressive action towards their monetary policy. Number five is the weakness or the feebleness in economic numbers. These economic numbers are coming off their highs, they are coming off their best readings that we haven't seen in a long time. And traders are thinking that monetary policy tightening is happening at a time when the central banks are actually tightening up the screws, so which is not certainly very, very positive. Thanks for her. Are you active on any other social media platform to the equal capacity of Twitter, such as LinkedIn or Instagram? So Salman is asking, am I? No, really. I would love to, but yes, Twitter is my main channel that I really communicate. But in the coming days, you would see me very active on Instagram and then perhaps to LinkedIn as well. Okay, so Alibaba is a stock that I hold from last year. Why do I hold this particular stock? Is for obvious reason, because the stock has come off its highs massively and it is trading near its lows. The lows which we haven't seen in a very, very long time. For example, if I go into a weekly chart, it is this particular area that we are very much focusing on right now. And it seems like that this is the area where we could potentially see a soft landing, meaning that the prices can really continue to move from here. Now the price formed recently a double bottom, the first bottom being over here, the second bottom over here, and now prices have started to move higher. So far this year, if you look at Tencent, if you look at Baidu, if you look at Alibaba, these three Chinese companies have actually outperformed all other US-based tech stocks, major tech stocks, because the rest of them, the majority of them are trading in negative territory. A few of them are trading in positive territory, but with very minor gains. But this Alibaba, Tencent, and Baidu are actually trading higher with very decent gains. So that could be a trend that we could continue to see throughout this year. Remember SoftBank, there was an announcement about Alibaba and SoftBank where there was a rumor that the SoftBank may have sold its share in Alibaba, but that was completely wrong. He confirmed by the company. Alibaba still owns, SoftBank still owns Alibaba. So overall, again, for disclaimer purposes, I own this particular stock, and this is a great area of support that I did see in this particular stock. And now it seems like that the price may have formed a bottom. The RSI is making higher lows, and that is an indication to us that Alibaba stock price is very much likely to move higher. In terms of your risk to reward ratio, we're looking at 121, and the minimum target is going to be 174 to 181, followed by that right over here, and then the third one would be all-time high. Now, when it comes to Amazon, Amazon also did see a massive plunge in its valuation when the Nasdaq started to fall or it started to decline. Now it has come to a very important area, and that important area is its 50-day simple moving average. Now, what we're going to see is can Amazon stay over here in terms of our support area if the price comes back down? We are going to be focused on right around here, 29.70 to 30.29. And in terms of our resistance, the first meaningful resistance area is really going to be right here on top of this particular on these candles. Now, because this is a resistance, and for those of you who know me well, you know that resistance lines are always in red. So for us just to make a differentiation between a support zone, or aka known as the buy zone, and the resistance zone, aka known as the sell zone. So this is the area that I will really buy again more into Amazon if price comes over here. The other possibility is the moment the price breaks above the 50-day simple moving average, highly likely to be today, you would put your stop loss below this particular candle and you would target this area and further from here. So overall, Amazon has seen tremendous recovery. The prices are moving in the right direction. We are likely to see more recovery here. Now, in terms of Twitter, what we really see in terms of Twitter is that the price violated this area of support. So now we are looking at new area of support, which is really right around in these particular areas, right over here, right? So on the weekly time frame, we're looking over here. The price did come close to that area, but didn't really actually join that area of support. It just came close to that area. Now the prices are moving back to the upside. In terms of resistance area, it is obviously going to be the first area of resistance is going to be here, and the second area of resistance is going to be just on top of these particular candles. Now, is there an opportunity for this particular one to come? Well, we need to put our moving averages over here, and I'm going to bring my 200 first, and then I'm going to bring my 100 moving average over here. So we'll just change this one from 200 to now 100, and we will change the color to yellow or orange, shall we say. And then we will bring our third one, and our third one is going to be again the moving average is going to be your 50-day this time, sorry, 50-week, and the color is going to be this one for that one. So what we see is on the daily time frame, when we go to our daily time frame, what we see is that the prices are still trading below that. So only when the price will break above this one, we will see an opportunity. Otherwise, Twitter, just like how the Nasdaq is doing, or Amazon is doing, they're still struggling. But with Alibaba, prices have changed quite a lot because we are, in this area of support. So we could see that. But what about banking stock? What about the Bank of America stock? The Bank of America stock did see the retracement. The price did come down when the overall market kind of was falling, and it did come down to its 200-day simple moving average to that area of 42. I was expecting it to go a little bit more lower into this area of 41 to 42, but it would just stay near 42.75. Now it is moving back up. So overall, the price has formed a double top over here. Now, only the next opportunity is going to be when the price breaks out of this one, because now we're sitting at, the recent highs over here. So there is no opportunity over here apart from selling this particular stock, going short on this particular stock. Otherwise, you will have to wait for a new territory to be formed when the price moves kind of above from that particular area. Now, what about our streaming stocks? Our stocks like Netflix, stocks like Disney, what are they doing? Again, what we're going to do is we're going to bring our moving averages first, so 50-day over here. Then we're going to bring our 100-day, the next one, indicator, and then we go to trend, and then we go to our moving average over here, and change the number to 100, and color will be orange. Then we're going to bring our third moving average, and trend is going to be, and moving average is going to be our 200. And what color is going to be? The color is going to be green for that one. So what we see in terms of a Disney, like again, part of that, the tech story is still very much trending lower, still very much struggling to find any decent support. But overall, the price is trading right over here. The bulls are still not in control of the price. There is still not really great opportunity. The price did come into this area of support, which we mentioned previously, and the price bounced off that. So if you were able to catch the price in this particular area, great. If you didn't, then we'll have to wait for the price either to break above the 50 or visit this particular area again. Now, in terms of a resistance, we're going to be focusing on a little bit higher numbers, and we're going to be focusing on this particular area, the 175. Again, we will change our resistance zones to red color, because just to keep things in synchronized with everything else. And we will do the same over here as well. We will change it to red. And now we know that this is our resistance area. That is, the green one is our support area. If the price comes in between these particular price actions, we will kind of trade them within that. Now, I am afraid that we haven't had the time to, that the time is coming to an end, and we haven't had the time to go through all the stocks that we mentioned. But I wanted to go through some of the comments over here before we call it a day. If oil sanctions on Iran has been lifted or about to be lifted, why the US oil or WTI is experiencing currently a consistent sell-off? Great question, Joey. So the question is about oil market, and which is related to energy stocks like BP, Shell, Chevron, all of that. So the question is that if sanctions are lifted, that why oil prices are going down? Because if the deal is done, then that means Iran can sell its oil back on the market, which is currently under sanctions. If Iran can sell its oil back on the market, that means we're going to get higher supply on the market. So that means higher supply, lower demand, and the law of price action will drive the prices lower. Hence, we are seeing a retracement in the price action. And that means companies which are purely dependent on fossil fuel will struggle. Does that make sense? All right, guys, we have gone a little bit over our time. The recording of this one will be available on our YouTube channel. Until then, adios. Stay tuned for our next webinar series, which will take place next week, same time, same place. And thank you for your time as always.